Good morning, everyone. Today is Wednesday, February the 22nd. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. I wanted to start with this chart. As many of you know, who've been following me for a long time, it is one of my favorites. It measures the amount of new highs minus new lows. And so with this negative 1714, it comes down into these regions where we normally see some bounce action occurring. Okay, so how long does it take to flesh out? And does it mean, you know what, I'm going to delete that. Yeah. And does that mean that we are going to have a meaningful bounce on the horizon? Let's go over to here, September, really rough month, okay? A lot of things happened in the currency market here, right? Forex, bonds, yields, the like. We're starting to see the same sort of things happening. So here's what we're going to think. We're going to think that as long as we hold the 4,000 level, this could be a meaningful bounce. However, we've still got a ton of negative delta in the broad price action as it sits. So we'll just have to see. My thought is, though, what we want to not do is pile in a ton of shorting action unless we're very quick on the trigger. Somebody asked me in the Benzinga Pro room yesterday, hey, listen, do you have any strangles that you could put out like we had last week that was such a big winner? And the question is no. And of course we can see why, because we've stagnated here all night long. So the takeaway for the study is the following. If I get to one of these big round numbers, and that's really in the ES, that is about 20 points on either side, and we're looking at the number 4,000, so we'd have to look all the way up to 4,020 and all the way down to 3,980 and think to ourselves, okay, as long as it sits in there, it means that the traders are still arguing about directional flow. What this could do to the NYSE is continue to bring down the number of new weekly lows as traders are taking profit from a massive January. This is one of the biggest Januaries on record in terms of the tech side for sure, but a lot of charts moved an unbelievable amount to the tune of 100% or more, many of them 60% or above. So the bottom line is this: don't think about shorting here without saying, hey, listen, if I short on the bounce, I need to get out at the support zone. I don't mean this chart. We don't trade this chart. I'm looking at broad motion because what we expect to see is a little bit more dribbling. Now, how long does it normally take? Each one of these levels, you can match it on your chart. A lot of us don't do enough homework, but we should. These levels showed price action in the market coming back into support. These levels here created dip buying events here because the moving averages were very sideways in the broad markets. They didn't dip dramatically. Now we've got a dramatic dip, and the last times we saw ourselves meaningful bounces. So here's what we're going to do. We're going to anticipate that there's a little bit more sitting on this, but traders are going to come in and try to buy these bottoms. What if they don't? That means we're going to lose 4,000 today. And let's go to our normal charts at TrendSpider to have a peek at that. We're going to lose that 4,000 level today, and we're going to start dipping into the prior month's regions to watch. Okay, so let's take a look at those prior months regions. This is the midline of the prior month's range, 39.72 and that 74, excuse me, and that's where we're sitting here. Notice this is a 4-hour candlestick. 1, 2, 3, 4, 5, 6. That's 24 hours arguing in this area. That's not great for the buyers, but it's also not great for the sellers. And so what I anticipate is a bounce that fades and gives us a little bit more downside. All right, look at what happened to us yesterday. All right, if we take a look at our monthly chart, we fell inside of the monthly ranges. And now we are sitting right here on this edge at 4,008, 4,011, somewhere around there. And what we're trying to do is hold. Now notice, weekly chart over here, resistance, support. That's what they're trying to hold. Remember I said several days ago, listen, do you see how this ribbon is sitting like here? It would not be surprising to watch it come into the ribbon, dip below, and then bounce. So this is exactly what we anticipated several days back. And of course, you can go to the YouTube channel and say, all right, let me go see what she said last week, Thursday, or whatever, right? So it's a great way to go, is this something I can count on or not? Notice, weekly chart, up, daily chart, up. But what we have to pay attention to is not that the moving averages were up. It's that we broke our support ledges from the prior week. And you can see that sitting in these ranges. Here we are at this 4090 area, which was the monthly close. And so as soon as we start losing that level, we have to think to ourselves, okay, big money is going to push this in. We know we have that $240 million bet that JP Morgan put on to bring us into the 4055. I expected that that would hold us, and it did for a wee bit. And then because they closed that position, we just lost the edges and it moved dramatically. And they were in the process of closing that position, taking it for profit. All right, so now we sit here. Are we making lower lows? Yes. Are we making lower highs? Yes. So the bounce will be a sell zone. Now, if you take a look at this, you're going to say, as long as I stay above the close of the prior day, I'm going to see buyers try to push price action to the north. The second I lose it, I've got 2 or 3 points, maybe 4, of squish. And if I don't hold those, I've got to get down and allow the chart to move to the base. What I want to see here is a bounce, probably up into 4022 to 4024, a fade, and then a hold of the level. And this could happen intraday on our 4-hour formations. I know that was very in-depth. I don't want to take a lot of time. You know, I like for these things not to be more than 10 minutes long. And so I'm just going to look at SPY here for us. Notice we lost the 400 zone, huge, but we battled at it for a while. And indeed, what we are trying to do is get above it. Now in the 4-hour formation, what do we see? Am I making lower lows? Well, I did here, but immediately got bought up. And so they are trying to hold traction here. But if we cannot get up above that that $400.65, every bounce will be a sell zone. So what is a chart pattern telling us? The chart pattern is telling us we could see fairly sideways action that's got a little bit of a slant to the downside. But in order to take the short, we must wait for the bounce. Okay, that's all there is to that. Let's take a look at the Qs. Make sure we see the levels. I know a lot of us do not trade the futures because they're a little bit frightening to us. That's okay. If you're looking at the Qs, you can see it came into the 294 area. Where is that? It's near the close of the prior month. And a lot of good things are happening in the Qs right now with AI and cybersecurity and a lot of different things. And so again, just like SPY, really trying to hold the level. Now, what's interesting is that it's piercing the bottom here a fair bit. So you want to be super careful buying here. I would prefer that we consider looking at bounces being sell zones until we get up over that 295.60 area and then pierce 296, pull back, and then hold the low. All right, good luck trading today. You've got to stay frosty. This is sideways tactical trading with very little trending formations over the long run. Take care, and I'll see you all tomorrow.